Wall Street wonderland where numbers dance and fortunes twist. Ever glanced at your phone, saw a bunch of numbers going haywire and thought, is that a secret code? Is the matrix glitching? No, my friend, that's just the stock market doing its thing. A wild, unpredictable roller coaster where fortunes are made and lost, faster than you can say, insider trading. But fear not, dear viewer, for I'm here to guide you through this financial jungle. Think of the stock market as a giant, chaotic party. You've got thousands of companies all dressed up in their finest financial statements, trying to impress investors like you. Some are doing the jitterbug, others are attempting the tango, and a few are just passed out on the punch bowl, looking at you, WeWork. It's a lot to keep track of, right? That's where stock market indices come in. So buckle up, Buttercup, as we delve into the world of the Dow Jones, Nasdaq and S&P 500, the holy trinity of market indicators. Index unveiled, your crystal ball for market mayhem. Now, before you think indices, sounds boring, let me assure you, these are no ordinary numbers. They're like the cool kids in high school. Everyone's watching them. Everyone wants to be associated with them. And understanding them can make you feel like you're part of some exclusive club, even if you're just wearing sweatpants and eating ramen while checking your portfolio. In essence, a stock market index tracks the performance of a specific group of stocks. Think of it like a carefully curated playlist for your investment portfolio. Instead of picking individual songs or stocks, you choose a playlist or index that aligns with your taste or investment goals. A soaring index usually means good times are rolling, while a plummeting one can send shivers down the spines of even the most seasoned Wall Street veterans. Dow Jones, the OG of market measures. All right, folks, let's kick things off with the granddaddy of them all, the Dow Jones Industrial Average, or as I like to call it, the DJIA. It sounds like a fancy award, doesn't it? Like something you'd win for best performance by a market index in a leading role. You see, the Dow Jones is the original influencer of the market world. Picture this, it's 1896, the Wild West is still pretty wild, and people are just starting to figure out this whole investing in companies thing. Enter Charles Dow, a financial journalist with a handlebar moustache that could give Ron Swanson a run for his money. Thus, the Dow Jones Industrial Average was born, forever changing the way we look at the stock market. A basket of blue chips, more than just potato chips. Now you might be wondering, what exactly is the Dow Jones tracking? Well, imagine a giant basket filled with stocks from 30 of America's biggest and most influential companies, like a corporate buffet where you only get the blue chip stocks. We're talking heavy hitters like Apple, Microsoft and Coca-Cola companies that are so massive they make your grandma's retirement fund look like a piggy bank. These 30 companies aren't just chosen randomly, they're carefully selected to represent a diverse range of industries, from tech to healthcare to consumer goods. The Dow Jones is a price-weighted index, which sounds complicated but is actually quite simple. Basically, it means that companies with higher stock prices have a greater influence on the index's overall value. From humble beginnings to global icon, the Dow's epic journey. The Dow Jones has come a long way since its humble beginnings. Back in 1896, it only had 12 companies, and its value was calculated using an abacus and a lot of guesswork. Okay, maybe not guesswork, but it was definitely more manual than today's computerized systems. Today, it's a global benchmark, with its every tick followed by millions around the world. Over the years, the Dow has weathered countless storms, world wars, recessions, even the Great Depression. Reading the Dow, is it a bull or a bear market? So, how do you make sense of the Dow Jones and its daily ups and downs? Well, it's all about understanding the language of the market. When the Dow is on the rise, it's considered a bull market, a term that evokes images of a charging bull, horns high, ready to take on the world, or at least the New York Stock Exchange. Why the Dow still matters. a legacy of influence. Despite its age, the Dow Jones remains a powerful force in the financial world. It's a widely recognized barometer of the US stock market's health, influencing investment decisions and shaping economic outlooks. It's like the wise old sage of Wall Street, offering insights and guidance to those who know how to listen. But the Dow isn't just for financial gurus and Wall Street wizards. Now, let's move on from the old school charm of the Dow Jones to something a little more, how do you say, digitally inclined. That's right, folks. It's time to delve into the world of the Nasdaq, the stock market index that's basically the love child of Wall Street and Silicon Valley. Imagine a place where traditional finance guys in pinstripe suits bump shoulders with tech bros in hoodies and flip-flops, all while discussing microchips and IPOs. That's the Nasdaq in a nutshell, a vibrant, ever-evolving ecosystem where innovation reigns supreme. But don't let the laid-back vibe fool you. The Nasdaq is a force to be reckoned with. While the Dow Jones is like that reliable old car that always gets you from point A to point B, the Nasdaq is more like a Tesla, sleek, innovative, and prone to the occasional software glitch, looking at you, Meta's metaverse. It's a market where companies are constantly pushing boundaries, disrupting industries, and changing the way we live, work, and even think. The Nasdaq is a market capitalization-weighted index, which means that companies with larger market values have a bigger impact on the index's performance. So, when a tech giant like Apple releases a revolutionary new product, or, let's be honest, just a slightly thinner iPhone, the entire Nasdaq feels the ripple effect. The Nasdaq is also a hotbed for smaller emerging companies with big dreams and even bigger potential. The Nasdaq has come a long way since its inception in 1971. Back then, bell-bottoms were all the rage, disco was king, and the Nasdaq was just a fledgling electronic stock market with a funny name. Seriously, try saying National Association of Securities Dealers Automated Quotations 5 times fast. Over the years, the Nasdaq has been at the forefront of technological advancement, embracing the internet boom of the 90s, weathering the dot-com bubble burst in the early 2000s, and riding the wave of mobile technology and social media in the 2010s. Today, the Nasdaq is more than just a stock market index. It's a symbol of technological progress, a testament to the power of human ingenuity. Section 4. Riding the tech wave. The Nasdaq's influence on your digital life. You might be thinking, okay, that's great and all, but how does the Nasdaq actually affect me? Well, my friend, the Nasdaq's influence on your life is probably a lot bigger than you realize. It's the driving force behind many of the technologies you use every day, from your smartphone to your streaming services to that online shopping addiction you're trying to hide from your significant other. These companies' successes and failures, their innovations and missteps all trickle down to you, the consumer, shaping your digital experience. Section 5. Nasdaq versus Dow Jones, a tale of two indices. Now that we've met our two contestants, the venerable Dow Jones and the tech-savvy Nasdaq, it's time for a good old-fashioned comparison. Think of it like those epic rap battles, except instead of diss tracks, we have market data and historical trends. In one corner we have the Dow Jones, the seasoned veteran, representing the stability and predictability of traditional industries. In the other corner we have the Nasdaq, the agile upstart, embodying the dynamism and innovation of the tech sector. So, who wins in this battle of the indices? Well, the answer, as with most things in life and finance, is it depends. Section 1S and P500, the all-star team of American business. All right, folks, we've met the old guard, the Dow Jones, and the tech-savvy Nasdaq. Now get ready for the main event, the heavyweight champion of the stock market world, the S&P 500. This index is like the Avengers of the financial world, a collection of 500 of America's most powerful companies, all assembled to give you a snapshot of the US economy in all its glory, and occasional meltdowns. Forget your exclusive clubs with just 30 members. The S&P 500 is like a massive, all-inclusive party where everyone who's anyone in corporate America gets an invitation. We're talking about companies of all shapes and sizes, from tech giants like Apple and Microsoft to healthcare behemoths like Johnson & Johnson and United Health Group. The S&P 500 is like that overachieving friend we all have. You know, the one who's somehow good at everything. Section 2, 500 companies, one powerful index decoding the S&P. Now you might be thinking, 500 companies, isn't that a bit much to keep track of? And you wouldn't be wrong. Trying to follow the individual performance of 500 companies is like trying to herd cats. Messy, chaotic, and likely to leave you with a few scratches. That's where the beauty of the S&P 500 comes in. It takes all those disparate companies, all those individual stock movements, and distills them into a single digestible number. The S&P 500 index value. This magical number represents the collective market capitalization of those 500 companies, weighted by their size. Section 3. From Wall Street to Main Street, the SP's broad reach. The S&P 500 isn't just some abstract financial instrument that only Wall Street hotshots care about. It's deeply intertwined with the lives of everyday Americans. Your retirement savings, your 401k, that index fund you keep hearing about but don't fully understand, they're all likely tied to the performance of the S&P 500. Think of the S&P 500 as the economic tide that lifts, or occasionally sinks, all boats. The S&P 500 is a potent reminder that what happens on Wall Street doesn't stay on Wall Street. It ripples out into the real world, impacting the lives of ordinary people in profound ways. The S&P 500, a crystal ball for the US economy. It's not a perfect predictor of the future, but it offers valuable insights into the US economy. Economists and analysts look to it for clues. Is it trending upwards? Great news. Is it plummeting? Time to stock up on canned goods? The S&P 500 is just one piece of the puzzle. So, there you have it, folks. The Dow Jones, the Nasdaq, and the S&P 500, the trifecta of market indices that dominate financial headlines and dictate the rhythms of Wall Street. But are these indices rivals, constantly vying for attention and investor dollars, or are they more like a dysfunctional family, each with its own quirks and personalities, yet ultimately connected by the shared goal of reflecting the market's ups and downs? The truth, as with most things in life, is somewhere in between. They're competitors for sure, each vying to be the go-to benchmark for investors seeking to gauge the market's pulse. But they're also interconnected, influenced by the same economic forces, reflecting different facets of the same market beast. Imagine the stock market as a vast and mysterious jungle. It's a wild place full of hidden treasures and lurking dangers. You need a guide, someone who knows the terrain. That's where our trusty indices come in. The Dow Jones, the Nasdaq, and the S&P 500. So grab your metaphorical compasses as we embark on a whirlwind expedition through the market jungle. First up, we have the Dow Jones, our seasoned veteran, plodding along the well-worn path, representing the stability and predictability of traditional industries. He's seen it all, bull markets, bear markets, even that time someone tried to pay their brokerage fees in Beanie Babies. Spoiler alert, it didn't end well. The Dow is a creature of habit, preferring the familiar territory of blue-chip companies, those massive corporations that are as American as apple pie, or at least as American as Apple products assembled overseas. He's not interested in chasing after the latest fads or investing in companies with more buzzwords than a tech conference. He's slow and steady, methodical in his approach, and his price-weighted system means that the biggest companies have the loudest voices in his travels. He's the epitome of slow and steady wins the race, reminding us that sometimes sticking to the fundamentals can lead to long-term rewards. Next, we have the Nasdaq, our resident speed demon, darting through the undergrowth, always on the lookout for the next big thing. He's the embodiment of innovation and disruption, fueled by caffeine, venture capital, and the unshakable belief that the future is just around the corner, and it probably involves artificial intelligence, blockchain, or some other tech buzzword we haven't even thought of yet. The Nasdaq thrives on volatility, embracing the boom and bust cycles of the tech industry like a roller coaster enthusiast. He's not afraid to take risks, investing in companies with unproven business models and sky-high valuations, always betting on the next big technological leap. His market cap-weighted system means that the companies with the most potential, or at least the most hype, have the most influence on his direction. He's a constant reminder that in the fast-paced world of technology, what's hot today might be obsolete tomorrow. Finally, we have the S&P 500, our wise old owl, perched atop the highest branches, surveying the entire market landscape with a keen and discerning eye. He's the voice of reason and balance, representing the broad diversity of the US economy. The S&P 500 takes a more holistic approach to investing, encompassing a wide range of sectors and industries, from tech to healthcare to energy to consumer goods. He's not swayed by the latest fads or obsessed with any single industry. His market cap-weighted system means that while he acknowledges the influence of the giants, he also gives voice to the smaller, nimbler companies that are the backbone of the economy. He's a reminder that true success lies in diversification, in finding opportunities across the entire market spectrum. So there you have it, folks. Our three index explorers, the steady tortoise, the agile hare, and the wise owl, each navigating the market jungle in their own unique way. But who ultimately comes out on top? Well, in the grand marathon of investing, there's no single winner. It all depends on your individual investment goals, risk tolerance, and time horizon. Are you looking for slow, steady growth like our friend the Dow Jones? Or are you more of a risk taker, willing to bet on the next big thing with the Nasdaq? Or maybe you prefer a more balanced approach, diversifying your portfolio across different sectors and industries with the S&P 500. The choice is yours, dear investor. Just remember, no matter which path you choose, the jungle of Wall Street is full of surprises. So buckle up, stay informed, and never invest more than you can afford to lose, unless you're playing the stock market game on your phone, in which case go wild. So, there you have it, folks. The Dow Jones, the Nasdaq, and the S&P 500 demystified. We've journeyed through the market jungle, met our intrepid index explorers, and hopefully learned a thing or two about how these benchmarks reflect the wild, wacky world of investing. Think of this as your cheat sheet, your Cliff's Notes, your Spark Notes, whatever helps you remember that these indices aren't just random numbers flashing across your screen. They're stories, narratives woven from the threads of corporate successes, failures, innovations, and yes, even the occasional accounting scandal. The Dow Jones, our old-school gentleman, reminds us that slow and steady growth, fueled by the power of established industries, can still pack a punch. The Nasdaq, our tech-obsessed wunderkind, embodies the dynamism and volatility of innovation, where fortunes are made and lost at the speed of a fiber optic cable. And the S&P 500, our wise and balanced observer, demonstrates the power of diversification, capturing the heartbeat of the US economy in all its messy glory. Now, before you rush out and dump your life savings into the next hot tech stock, Remember the most important lesson of all. Investing is a marathon, not a sprint. Don't get caught up in the hype, the fear, or the FOMO. The market will have its ups and downs. It's like that unpredictable friend who's a blast to hang out with sometimes, but can also be a real drag on your emotional well-being. So, what's the secret to navigating this financial roller coaster? Knowledge, my friends, knowledge. Educate yourself, diversify your portfolio, and remember that time in the market is often more important than timing the market.